Today we've got Trace Meyer, entrepreneur, investor, and early Bitcoin thought leader. Thanks for coming on the show, Trace.
Thanks, Jared.
So lately we've seen a lot of high-profile arrests. We saw Ross Ulbricht from Silk Road. We saw Charlie Shrem. You got any thoughts on the government cracking down on Bitcoin?
I don't think they're necessarily cracking down on Bitcoin as much as they're cracking down on actors that have used Bitcoin to facilitate activity that is already known to be illegal. So, what do you expect?
Fair enough. So if you're a Bitcoin accepting business or you're looking to accept Bitcoin, what do you have to watch out for? Are these warning signs? Should this be frightening people from accepting Bitcoin?
No, I don't think it should be frightening businesses from accepting Bitcoin or working with the more legitimate players, or should I say legally compliant players in the Bitcoin space, companies like BitPay or Coinbase or other ones that have anti-money laundering policies that actually implement the anti-money laundering policies, that don't try to teach their customers how to circumvent them. All of that, I think, is a way to really provoke the regulators. And there's no reason to provoke them if you're using it for what are otherwise completely legal activities. And they've already come out and said that Bitcoin has many legitimate and is legal to use. And so, as long as you're not trying to do things that are otherwise illegal, I don't think you really have much to fear from it.
Fair enough. So Trace, you've been involved in Bitcoin since about 2010. Is that about right?
Yeah, a long time.
Long time. So what first attracted you to Bitcoin? Why did you first get involved with it?
Well, it's such an interesting experiment to begin with. We have asymmetric cryptography being implemented in a distributed system to create the first practical implementation of triple entry bookkeeping. And I think that the effects that has from a monetary science and a monetary theory point of view, just pushing forward that innovation, and the effects that it can then have on corporations and corporate governance and all types of things that we use. We came up with double entry bookkeeping as a species over 500 years ago, and it led to accumulation of capital on a very large scale with the Industrial Revolution and a lot of the institutions that we have today. When we're able to further refine that with triple entry bookkeeping, it really opens up whole new vistas and possibilities for corporate governance, transfer of money, accounting, all of those things.
So could you better explain the difference between single entry, double entry, and triple entry accounting for us?
Yeah, so single entry bookkeeping is, you just have like one column. And it's like, I have 6 apples. And then you get out your eraser and you change it and you say you have 4 apples. And whatever you have is just whatever's in the ledger at the time. Interestingly, we could see institutions like PayPal abuse that,
right,
because there's no proof to what your balance is in the ledger. Then we've got double entry bookkeeping, where you've got debits and credits, and your assets have to equal your liabilities plus owner's equity. And we have under accounting theory, we have different ways of the cash flowing through the income statements to the balance sheet. And then we can create cash flow statements out of that. And so, which is all fine and dandy until your AIG or you're accounting for derivatives, and you're valuing things to get a bonus, and you're valuing them high if they're on your asset side of the balance sheet, you're valuing them low if they're on the liability side of the balance sheet. Then you have gigantic messes like Lehman Brothers, Bank of America, Bear Stearns, AIG, Fannie Mae, Freddie Mac, who needed bailouts, right? Everybody who needed bailouts, they were playing accounting games, really. They were screwing up how they're accounting for things on their balance sheets. And they're able to do it because they don't have a ledger that cannot be changed or otherwise altered or have fraudulent transactions happen on it. And that's what we have with Bitcoin. We have this globally distributed, decentralized ledger that everybody has the exact same copy of, and all the debits and credits that move the Bitcoins or the Satoshis around in this ledger, everybody agrees on consensus that those transactions actually happen, and boom, you got that verification. So you have the debit, the credit, and you have the confirmation by the Bitcoin network.
So do you think that's the biggest reason that Bitcoin will succeed, or do you think there's other things really pushing Bitcoin along?
Well, there are a lot of other things that are pushing Bitcoin along, but I think that's one of the fundamental breakthroughs that we have here. We have the Byzantine Generals problem, where we have distributed trust coming to consensus on what the ledger should be. One of the immediate applications of that is currency, which you could use for whatever, but I mean, that's just such a base level of abstraction. When we start moving into these higher levels of abstraction, applying it to corporate financial statements, for example, it just offers so much benefit and opportunity to people. And then you can couple it with things like peer-to-peer lending and distributed autonomous corporations and like all these things that were otherwise science fiction, but now, because that impossible Byzantine Generals problem got solved, we can now apply all of these things.
So you were bullish on Bitcoin in the beginning. You saw the technological implications and what it could become, and you recognized it and you saw it coming. Do you feel the same thing about Dogecoin?
Dogecoin?
Dogecoin, whatever we call it.
Whatever. No, not really.
So we've got a lot of altcoins. We've got Litecoin, we've got Feathercoin, we've got I guess a beer coin out there now, and then we've got Ripple, which is actually doing something different. So do you think any of these are really going to take off?
I have a friend. He just bought a site, coinreporting.com, I think it is, where he'll import all the trading data for all these altcoins and help you calculate your tax liability. And he made an interesting comment to me that none of these altcoins have failed, which
can't argue with that yet.
Yeah, I mean, they can sure go down in price a lot, but they haven't actually failed, And then like Kraken,
right.
one of our Bitcoin exchanges, they wanted to implement Namecoin, and they discovered in Namecoin a fatal vulnerability in the protocol, and they announced it, and the Namecoin dev team didn't fix it, so the Kraken dev team fixed it. The Namecoins have gone from $2 to 17 cents, bam, up to $12. So it's very interesting. These math-based currencies, these cryptocurrencies, they're amazingly resilient. They all have different utility use cases that they could provide if there's innovation there. Namecoin, for example, is distributed DNS. What real innovation does Dogecoin add, for example? Maybe it's fake internet money, and that's how you market it, and so you get a lot of people introduced to the concept of math-based currencies or cryptocurrencies. Because Dogecoin's got significant volume, 24-hour volume, over $1 million. So no, I don't necessarily think they'll fail. And I think each of the altcoins will probably succeed if they really push innovation forward in whatever sphere that they're going after.
Right.
Whether it's anonymous coin or zero coin or Dogecoin or Namecoin or whatever.
So could you talk about Namecoin a little bit more? Essentially it's a distributed domain name server system, right? So you own these coins and you can essentially buy a domain name that can't be controlled by a third party.
Yeah, it's like a .bit, but you have to get your browser to kind of.
Okay, so it's a little bit of work involved with.
Oh yeah, a lot of work involved.
It's still early though too.
Yeah, and there's really not been a lot of innovation and work done on it. And Namecoin's actually merged mined on the Bitcoin. You get to merge mine it. So, some coins you merge mine, some coins you don't. Like Litecoin, for example, is not merge mined. So Namecoin's just there. Satoshi actually, we used to be able to send Bitcoins to an IP address, and so I think that there's a lot with distributed networks and network topography and how we broadcast things around that Namecoin could be interesting with that. But Bitcoin's pushing development forward in the payment protocol. So wherever the innovation's happening, I think that's where the value creation is going to be taking place, and the price will follow it. And then once you start cementing in the network effects, it's going to be very hard to overcome those. So, you might even have a superior tool, but if you don't have the network effects, then people just aren't going to speak your language.
No, for sure, for sure. Building a better Facebook doesn't mean you're going to take over social media.
Yeah.
So we've seen a lot of regulation actually forming for a change here. What's your opinion on Benjamin Losky in New York and the BIT license? It looks like it's coming together.
Yeah, so regulation, I'm actually pretty ambivalent about it because the big issue with Bitcoin is that it's censorship resistant. And so all this regulation does is introduce profit opportunity for entrepreneurs in a lot of ways. And we're seeing that particularly in Argentina, where the regulation and currency controls of that particular market of value transmission and storage of value is just absurd. But it leads to a lot of profit opportunity. There's arbitrage, things like that. So I think really what we're seeing with Superintendent Losky is regulators are realizing there's significant value in this system. It's a large technological innovation that has a lot of potential to benefit humanity. It can be used for nefarious purposes, but law enforcement has been able to already take steps in that direction. And like the early internet, leaving it open in terms of being able to innovate is probably going to be a good thing. I liked what Fred Wilson had to say at those hearings. If you bet on the companies that China bans, you do really well in your portfolio, Facebook, Google, etc. So I think that our regulators in the U.S. will probably take a fairly reasonable approach to dealing with Bitcoin companies. If they don't, they'll just create more profit opportunity for entrepreneurs to circumvent regulations or whatever, which is going to happen anyways, just because of natural human action and behavior. So, if they have a really big carrot in addition to a really big stick, I think it'll be much more effective than if they have only just a really big stick.
For sure. And also, we've seen a lot of people like Jeremy Allaire entering the Bitcoin space that you wouldn't have before we had this regulation in place. So we've seen a really big schism forming in the Bitcoin community. You've got your early crypto anarchist adopters like Amir Taki, who's really big on privacy and anonymity and using Bitcoin to circumvent the government or overthrow the Fed or claims like this. And then you've got new people entering the space like Jeremy Allaire, who wouldn't have entered without this regulation in place, most likely. What are your thoughts on this divide that's coming along?
Well, first, I think that the big deal with Bitcoin is that it's trustless and that individuals hold the private keys to wealth. That's a real big deal. Previously in history, when you look at how humans organize themselves in society to define property rights, we have title registries and we formed governments, and for the most part that's how we administer property rights. And so who owns the private keys to a car, for example? Well, you got a title, and supposedly that's where your private keys, you might be in possession of the private keys at a certain point in time, but it'd be pretty easy to pull you over and for someone else to take control of that car, and so they get the private keys. And actually with some of the self-driving cars, and over in the UK, they want to actually have the car manufacturers build in where they can turn the cars off, remotely. So we're seeing who controls the private keys to wealth. HSBC, for example, people went in and wanted to withdraw 5,000 pounds of cash over in the UK, and HSBC said, no, what are you going to use it for, blah, 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 blah. So we have an example of where somebody has ownership under the current legal system or structure, but someone else holds the private keys, and there's a conflict in how they want those private keys administered. With Bitcoin, you don't have that issue. Individuals hold the private keys. That's one of the reasons I funded Armory, is because we want to make it safe and secure for individuals to hold their private keys. And this new way of administering property rights, I think that's big. And the more that we can do to build this space out, I think the better. It decentralizes the keys of wealth among everybody who holds them, instead of concentrating those keys of wealth into particular entities, whether it's title to a piece of real estate. You might have possession of the real estate, but you don't actually hold the private keys. Government likely holds the private keys because they've got the army. They can come and occupy it if they want. And so we're seeing that, with share certificates on stocks, for example. I mean, you might own the shares of stock, but you don't hold the private keys. With Bitcoin, we can decentralize so many of these private keys of wealth. And I think that's really Satoshi's vision, to trustlessly distribute the keys of wealth.
So when we look at Bitcoin in the past, we had companies like My Bitcoin, which most people might have forgot about by now, which ran off with, 25,000 Bitcoins or so.
Something absurd, yeah.
And they were holding the private keys, not the users. And then when you compare that to companies like blockchain.info, where they hold an encrypted backup of your key, so they can help you out if you lose your keys, but they don't actually hold your keys, and they can't run off with your money. Mm-hmm. So as we go forward, do you believe we're going to see more companies that are more like My Bitcoin and Coinbase? And when I compare the two, I don't mean that Coinbase is going to run off with your money, of course. But Coinbase, they do, and they do hold the keys.
And unfortunately, let's say there is a security breach at Coinbase. Mm-hmm. And let's say that $100 million worth of Bitcoins disappears. There's no way for Coinbase to prove whether they were that some nefarious Chinese hacker or Russian hacker stole the keys, or whether they absconded with the keys themselves.
Right.
So, yeah, I mean, it's a real problem. But so if you want to entrust people to hold the private keys of your wealth, okay, well, we used to have a saying, he who has the gold makes the rules.
Right.
Well, I think increasingly as we move into the information age, we're learning that it's he who holds the private keys makes the rules.
So do you think we're going to see a lot more blockchain style companies that allow you to hold your keys in the future, or do you think we're going to see more of the Coinbase style?
I think we'll see both.
Yeah.
There are a lot of people who are just incompetent to hold their own private keys. Right. It's a new, fairly technical area. Don't blame them.
Right.
Kindergarten is good. Coinbase is good for people to get their introduction to cypherspace. Then you can move up and use something like blockchain.info.
For sure.
And then you keep learning, and you go to high school and you get the Bitcoin QT client. And if you want to move into higher education, you can download Armory, and put your big boy pants on and hold your own private keys. But if you don't hold your own private keys, you're at the mercy of somebody else, and whether they'll actually, now you've introduced not just exchange rate risk with the price of Bitcoin, but you've introduced performance risk, that the person will actually administer those private keys the way you want them to be administered.
There's also a few companies that are working on software as a service multisig technology. So essentially you could hold a key and Coinbase can hold a key, and then this third company would also hold a key and kind of act as an intermediary to prevent either one of you from really screwing it up and losing your entire money. Have you looked at any of those companies?
Yeah, I've looked at some in their infancy, where you might get a text message. I think BitGo already has a working implementation of this. Yeah, I mean, if you need help, if you need to be babysat holding your own private keys, then I think there's definitely a market for that. But as people kind of, there's one thing about individuals, and they do like to have control over their own destiny. You turn 16, you get the keys to the car. I mean, but some people never like to take responsibility for their own actions, and especially financially, and so they want to continue using credit cards or bank accounts where the institutions that hold those private keys can turn them off. Boom, just like that. And there's nothing you can do about it.
So we just heard that the new Silk Road, Utopia, was just hacked, and their keys were in their users' keys were in a hot wallet that they were storing. Is this the kind of thing you're talking about, where there's no way to prove? How are we going to find out? Did the guy running the site actually run off with the keys? And it's Silk Road, so it's even more, hidden, of course.
Yeah, I mean, and there's really no recourse for the people who who thought that they had control Bitcoins.
Right.
Because at the end of the day, like, they gave those private keys to someone else. So you can't even say that they were their Bitcoins anymore.
Right.
We've seen this time and again. We talked about my Bitcoin already. The sheep market ran off with like $100 million worth of people's Bitcoins. The FBI's got $150 million worth of Bitcoins that they supposedly seized from the Dread Pirate Roberts' laptop. I wonder how the FBI is even securing those, because I mean that's like way better than the pension that those FBI agents are earning, right? And like, oh, we got hacked by the NSA. That'd be kind of funny.
I did think it was kind of funny how they moved the coins in 234 at a time.
Right.
You saw that, right?
FBI,
yeah. Yeah. I wonder, maybe they're using Piper wallets. We should send them a Piper wallet. Get them set up.
I actually got like Piper wallets like printed out right here. It's pretty fun stuff.
Yeah.
But it's crazy to think that, like, I mean, that's it. Just the little private key, like right there. The FBI's got $100 million worth of value secured by like a little string of text like that.
Right.
I mean, it's crazy to think about. But as long as you can keep your private keys safe and secure, whether it's an Armory or using something like Piper Wallet or bitaddress.org that's on an offline computer, I think that's a big deal, because it decentralizes the keys of wealth away from these centralized banks and institutions that we have.